In this video, we're going to talk about Lucid, trading under the ticker symbol LCID. Lucid Motor is a startup based in Newark, California. It manufactures EV vehicles, specifically targets the high-end segment of that market. The main appeal of Lucid is that it is based in the US. It is widely considered as a potential rival and alternative investment to Tesla, and this means that the market participants who want to either hedge their exposure in Tesla or who believe in the sector itself may consider investing in Lucid. Another appeal for investors is that, unlike other EV startups like NIO, Lucid is based and operates in the United States, so there will be little to no worry about the effect of remote oversight and geopolitical tensions. The recent catalysts have been focusing on the release of Lucid Air, a widely acclaimed vehicle from the critics, and may provide the company capital to keep growing at a fast pace. The trading volume of Lucid has recently been 39.6 million shares compared to an average volume of 49.6 million shares. Over the previous 52-week period, its price has been fluctuating between $10.02 and $64.86. The market cap of Lucid is currently at $63 million. The market cap of Lucid is currently at $63 billion, compared to an enterprise value of $27 billion. The difference between the market cap and its enterprise value is the premium or discount financial market is willing to allocate to the company based on its current fundamentals, leverage, and asset composition. Some of the examples of impact by leverage is if the company has a lot of debt, then the market may feel uncertain about the company's capacity to pay back its interest and principals, which then negatively impacts its profitability and even solvency. Another key element to understand is the asset composition of many companies, and it is especially true for growth-type companies. For many of those, one of the most significant assets they own is goodwill. Goodwill is basically an expectation of the market that the company is able to generate more profit or to have more growth than another company, partially because it has a good management, stronger brand recognition, or bigger online following. In other words, it's not an asset that companies can use, but it's often the reason why some companies are perceived to be trading at a discount. By the way, it's not the case of Lucid. Lucid is benefiting from a massive premium from the financial market. So the market cap is sometimes lower than the enterprise value, not really because the assets are necessarily all valued that much, but because it includes this non-tangible asset called goodwill. So this is something to keep in mind when comparing the market cap and the EV. In comparison to its historical price fluctuations, the stock is 23% higher than the 1-month low, 88% higher than the 3-month low, and 315% higher than the 52-week low. In terms of the options market, which often gives a hint on the market sentiment on where the stock price is likely going to head toward, the implied volatility is 90%, compared to a historical volatility of 65%. The put-call volume ratio is currently at 0.8. The most recent volume of options traded has been 256 contracts within a day, compared to the 30-day average volume of 234,000. The most recent volume of options traded has been 256,000 contracts within a day, compared to the 30-day average of 234,000. In terms of its open interest, the most recent volume of open interest has been 1.19 million contracts, compared to the 30-day average of 1.2 million contracts. Regarding the shareholder structure, institutional shareholders hold 69% of its outstanding shares. The biggest shareholders include Vanguard, Franklin Resources, and Blackstone. The relevance of shareholder structure is important to determine whether you should be holding the stock long-term or to view it as a short-term volatility. Because if the stock is mainly held by retail traders, it may be a sign that institutional shareholders are shying away from it because it may lack the depth or justifications to hold long-term. Of course, there are a lot of exceptions from what I said above, but usually the consensus is that there should be around 25 to 30% of institutional participation for the stock to be perceived as a sound investment and not just a short-term trade. Let's also look at the short interest present in the stock, which is the amount of the positions aiming to profit if the share price falls lower. Sometimes, if there are significant short interest in the total volume, it could be a sign that there is an organized shorting operation going on, like what is going on with the GameStop or AMC. The current short interest is 13.17% of the total float and 57% of the dark pool transactions. Now, let's take a look at the indicators. Financial indicators give us a hint of what the price movements are showing, and they can be used as one of the elements to determine what should be our overall approach. Oscillators are showing 0 sell, 8 neutral, and 3 buy, with an overall tendency of buy. The moving averages over the past price actions show 1 sell, 1 neutral, and 13 buy, with an overall tendency of strong buy. The moving average can be used to determine whether the stock is overbought or oversold compared to its previous price fluctuations, which can be used to see if your trade is sufficiently well timed. In terms of pivot points, which are levels of support and resistance sprinkled in the price trends, the support levels are $22.56, $30.47, and $35.36. For the resistance levels, they are $39.95, $56.07, and $63.98. From a corporate and equity perspective, Lucid Motors is a company that benefited from the risk appetite from the market at large. The fact that Lucid arrived in the golden age of EV startups and SPACs in a sequence of events when the demand for EV stocks was peaking definitely helped. The main factor behind this significant popularity of EV stocks is because Tesla's stock price during the same period of time has been multiplied by 10, and because people believe that Lucid is an alternative to Tesla, but at a more affordable price. Going forward, I believe that there may be more challenges for the sector at large, despite the fact that Lucid has since then released models. EV sector was the place a lot of this capital went into, and at the end of the day, supply and demand have determined price dynamic of many companies. But there is also another reason, and that is the power of pure narrative. In investors' mind, at least for investors in those circumstances, there is not necessarily the need of fundamental results, in other words, delivery numbers, models, or timetables, as long as the stock is compelling. This was enough back then because everyone was comfortable with the idea that there will be enough people coming in to support the price. Of course, Lucid sets itself apart because it's been around for nearly a decade at this point, and that it seems to aim the high-end segment of the clientele because that's where there's the most profit margins. With that being said, the Lucid stock is going through some confusing time, which can be interpreted as a consolidation after rallying up, or it can be a sign that investors in the sector in general are not very certain whether they should keep pouring in money into the company's valuations. This reflects to a large degree what the sector has been going through for some time now, as the industry is going through fundamental difficulties and possibly regulatory ones, since there may be delisting risks for some of those companies in the sector. Overall, there's a shift of interest from market participants. If the name of the game back in 2020 was SPAC and EV companies, in 2021 and beyond, there are more choices for capital to be placed in. From time to time, different industries or individual companies may attract a massive amount of money in it for various reasons, like short squeeze or the illusion of it. The expansion of crypto lending, recovery, or perceived opportunities in the traditional lines of business, or simply the pursuit of stability by putting in money into fixed income instruments, or the pursuit of thrills by putting money into short squeeze stocks, are all possible reasons that there are less people focusing on electric vehicle sector. The global supply chains issues have also slowed down the operations of many, and that includes Lucid, which already caused some delays in the past and may begin to cause more troubles as we go ahead, and may also cause other issues as we move beyond. I would suggest to keep an eye on Lucid and to have a small position in the door Even though right now it's a bit too early to talk about where should we profit from, I would say that the previous peaks are a good place to start looking. So in other words, around $50, maybe you should consider unloading some of your exposure and only keep your profit in the stock if this is your risk profile. Your investment should also take into consideration the market conditions at the time and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomena are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational, and I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right, to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.